Hello, I'm John Hadjipateras, the Chief Executive Officer and the Chairman of Dorian LPG. Dorian is a fully integrated liquefied petroleum gas company and the owner and operator of a large fleet of 22 modern large gas carriers, or VLGCs. The company is listed on the New York Stock Exchange under the symbol LPG. Dorian is headquartered in Connecticut and has offices in London, Athens, and Singapore, and is incorporated in the Republic of the Marshall Islands. Our modern fleet has an average age of 3.5 years versus the industry average of 8.9 years. Of our 22 vessel fleet, 19 VLGCs are Eco VLGCs. This is significant as Eco VLGCs are fuel efficient compared to traditional VLGCs, which can result in substantial cost efficiencies. Dorian is both an owner and an operator of VLGCs. We provide in-house commercial and technical management for all our vessels, as well as a number of VLGCs that operate in the Helios pool. Our mission is to arrange safe, reliable, trouble-free transportation, and we're committed to the highest quality of customer service. While Dorian's seafaring tradition dates back more than 200 years, the company was founded in 2013 when we went through an extraordinary and rapid expansion, constructing 19 VLGCs at Hyundai Heavy Industries and Daewoo Heavy Industries in Korea. LPG vessels are highly engineered and exacting technical specifications determine commercial acceptance. Our vessels were built to very high technical specifications, and Hyundai and Daewoo are two of the world's best shipyards and also design and build some of the most complex offshore vessels and rigs. Dorian and its predecessors have built 24 vessels at Hyundai since 2004 and maintain a strong relationship with the yard. We created the Helios LPG pool, expanding our commercial footprint further. The pool was formed and is operated as a 50-50 partnership with Phoenix Tankers, a subsidiary of MOL, one of Japan's biggest ship owners. At the end of this month, the Helios pool fleet will comprise 29 VLGCs, including 18 owned by Dorian, 5 owned by Phoenix, and 3 controlled by Oriental Energy, one of the largest propane dehydrogenation plant operators and LPG importers in China, and 3 chartered-in VLGCs. 4 of our VLGCs are on long-term time charter outside the Helios pool. Liquefied petroleum gas, or LPG, is a fossil fuel made during natural gas processing and oil refining. LPG is a byproduct of both oil and natural gas production, and more than 2/3 of the LPG people use is extracted directly from the earth. The rest of it is manufactured indirectly from crude oil refining. There are more than 1,000 applications of LPG. Hundreds of millions of people currently use LPG and depend on it for thousands of applications. In commercial business, industry, transportation, farming, power generation, cooking, heating, and for recreational purposes. It is referred to as the world's most multi-purpose energy. LPG is cleaner than coal and oil as an alternative to gasoline and kerosene. It creates less air pollution and produces fewer emissions of carbon dioxide, which cause global warming. LPG is also highly portable, making it a convenient source of energy usable in remote places where ordinary gas supplies are unavailable or have been interrupted. International seaborne LPG transportation services are generally provided by 2 types of operators: LPG distributors and traders, and independent ship owners like Dorian LPG. Vessels are generally operated under time charters, bareboat charters, spot charters, or contracts of affreightment. LPG transportation services operate in markets that are highly competitive and based primarily on supply and demand of available vessels. Generally, competition for charters is based upon charter rate, operating expertise and efficiency, professional reputation, and vessel specifications like size, age, condition, and fuel consumption. VLGCs like those owned by Dorian are the largest class of vessels in the global LPG fleet. These vessels are highly engineered to meet exacting demands of customers as well as to comply with strict environmental regulations, including emission regulations. Dorian's modern Eco-class fleet of VLGCs, combined with its high level of crew training and strict vessel maintenance program, have made it a preferred provider of LPG transportation services. The continuing adoption of LPG has been aided by significant infrastructure investments throughout the world, as well as by the U.S. shale boom, which has produced abundant supply of LPG to meet growing demand. Seaborne LPG volumes have consistently risen over the past 5 years and are projected to rise further as global demand continues to grow. Traditionally, the main trading route in our industry has been the transport of LPG from the Arabian Gulf to Asia. With the emergence of the United States as a major export hub, the U.S. Gulf to Asia has become an important trade route. LPG export volumes from the United States and the Middle East, the two primary regions that supply the global market, have both continued to grow as new export projects have come online. Since the shale oil boom began in the United States has significantly increased its share of the global LPG export market, and from being a net importer to being the largest exporting country in the world. This has created price competition among suppliers and also led to longer vessel voyages, which has the effect of absorbing vessel supply. The vast majority of demand growth has come from Asia, which has become increasingly reliant on U.S. LPG. U.S. LPG exports were at record high levels in the first 4 months of 2017, generating a positive effect on the market. Turning to demand, China's annual LPG imports, as measured in metric tons, has increased by nearly 400% since 2013. LPG demand in China is forecasted to increase by 10% in 2017. China's residential and commercial demand have been climbing in tandem with the country's initiative to replace solid biofuels in rural areas. Supply from the Middle East will not grow fast enough to meet import demands from China, which means more LPG will be sourced from the United States. In India, the Modi government declared 2016 the year of the LPG consumer and aggressively promoted penetration in rural areas. Millions of LPG consumers were added last year, both as a result of government subsidies and lower international LPG prices. Also, increased taxes on gasoline led to increased LPG auto gas consumption. India's LPG imports have registered a 17% year-over-year growth thus far in 2017 and are forecast to increase by 25% year-over-year. Recent data provided by the Indian Oil Ministry reported a record 32.5 million new LPG connections being added in the last year. Plans are to add further 70 million connections in the next 2 years. The ministry estimates that adding 10 million new LPG connections will require $1.5 billion in LPG infrastructure investments. Expanding import terminal capacity, adding more LPG bottling plants, and commissioning new LPG distribution centers will be required to facilitate this rapid expansion in demand. Other Asian countries, including Korea, Indonesia, Vietnam, and Bangladesh, are also seeing strong growth in demand for LPG. In Indonesia and Bangladesh, the governments are encouraging LPG adoption through subsidy programs and other measures. There are, of course, dynamics that affect our market and operating results outside of the demand supply that we just described. VLGC daily time charter equivalent rates spiked 2 years ago before falling sharply in the ensuing months. For a brief period of time, rates were below $10,000 a day, a level that is below cash break-even costs for most owners. The rate environment has improved, but is still relatively weak. Recent market weakness has primarily been due to the rapid growth of the global VLGC fleet. In 2016, the global fleet grew by nearly 20% as 36 new vessels were delivered from shipyards. Fleet utilization remained relatively high despite this and has rebounded a bit thus far in 2017. In 2017, 14 new VLGCs have been added to the global fleet through the end of May, and an additional 10 are scheduled for delivery later this year. After that, the pace of delivery slows significantly in 2018 and beyond. Looking forward, there's been very limited new ordering activity over the past several years, and the size of the global fleet may eventually begin to contract. By the end of this year, there will be 35 VLGCs that are over 20 years of age. These vessels are more difficult to charter than modern vessels, and they do not have the cost efficiency of modern vessels. In a competitive environment, these vessels may no longer be economical to operate and may be sold by their owners for scrap. There are also two notable environmental mandates from the IMO, International Maritime Organization, that may compel owners to scrap their vessels. The first relates to the treatment of ballast water, which is one of the biggest problems faced by the shipping industry and poses a threat to the marine ecosystem. The IMO has mandated that all vessels undergoing dry dockings after September 8, 2017 will be required to install ballast water treatments to the extent such systems are not already installed. We estimate that between 65 and 70 VLGCs will be dry docked between now and the end of next year, with many requiring ballast water systems installed at their owner's expense. The IMO recently made another landmark decision that will both benefit the environment and human health when the organization decided to implement a global cap on sulfur emissions that will come into force in 2020. While this may seem to be years away, the deadline is rapidly approaching for ship owners, and a decision will have significant effects on the shipping industry across all sectors. Vessels will be able to meet the new sulfur requirement by using low sulfur compliant fuel oil, which will result in higher fuel costs. Alternatively, owners may elect to install scrubbers on their vessels, which clean the emissions before they are released into the atmosphere. Dorian LPG is prepared for these new regulatory changes with the youngest and most modern eco VLGC fleet in the world. 16 of our 22 vessels are already equipped with ballast water treatment systems. 2 of our vessels were delivered to us with scrubbers installed, and 17 are scrubber ready, meaning the vessels would not need to be retrofitted to accommodate scrubbers when the time comes. We have been in the shipping industry for decades and in the LPG market since 2002, and we've seen many market ups and downs. The past 12 months have been characterized by weakness in our segment, which has absorbed an extraordinary number of new buildings. As fleet supply growth abates and minimal new ordering has taken place, we believe the market will soon begin to rebalance. Against that backdrop, global demand for LPG continues its robust growth, and LPG supply and export capacity are following positive trends. The growth in LPG trade has been facilitated by global growth in export, import, and processing infrastructure, as well as an increasing supply of LPG from the US market. This has made LPG a price-competitive product and a mature option within a country's energy portfolio. The world is also rapidly recognizing the environmental benefits of using LPG for power generation and retail consumption. LPG is already used by almost 3 billion people globally and has the potential to change the landscape of household energy use. This is particularly true in the developing world, where LPG can provide substantial benefits for health, climate, and safety. Years ago, we adopted a mission statement which serves as a guiding principle for our company. That mission is to arrange safe, reliable, and trouble-free transportation for our customers. This is a concept that is in our DNA and fundamental to our business dealings. It is also the basis for our long-standing customer relationships. We believe that our commitment to focus on customer service, on our chartering strategy, and on managing our costs will serve as the pillars of our long-term strategy aimed at creating value for our shareholders. Thank you.